Hi guys, and welcome back to FutureFunded. Today I'm about to showcase to you an entry model and a strategy that I use to pass my FutureFunded accounts. It's based upon FX and it's an extra confluence that goes in line with my strategy, which is SMC, and I'm going to showcase to you exactly how I do it. So let's get into it. So if we just get into this now then, and we start on GU. Alright, so if we just go to the 15-minute time frame to begin with, we can clearly see that on the 15-minute, we are stepping up with some momentum into this, what was this high, all right? And this actually broke the 1 hour and the 4 hour high. So as soon as that happens, we're normally due some form of retracement. And that's exactly what kind of happened here. You see, we got this break of structure right here on the 15-minute. Price then carried on to the downside, creating lower highs, a sort of low, lower high, new low. So we've got exactly what we're looking for. We know that the 15-minute is just broken structure. We know that the overall direction of the trend is to the upside, but we've got good reason at this current price for price to continue to move further down and take out lower points of liquidity. For example, I saw that there was liquidity right here, and then there's even more equal lows sat down here for price to actually come and take out. One of the main things with the strategy is what we look for is points of interest and liquidity. In my opinion, price or markets can't move without one of those two things, or that's at least one of the things that actually drive price in the first place. So now that we know that, going into the 5-minute time frame, normally speaking with my SMC concept, I would look for a lower low and then a lower high. So as we've got right here, we've got a lower high right here. We've got a breaker structure to the downside right there, but then we've got this breaker structure right here to the upside. Okay, now this is where, typically speaking, I would look for a point of interest right here, and I would actually look for price to then come back to it and move up. But that's the key thing. I'd look for price to come back to it and then move up. And normally speaking, I would enter a buy position, but because market structure wasn't in my favor, I actually did the opposite. I looked to sell into that POI at that point. Now, how do I actually do that? What's the entry model? Because you can't just enter at any old place, right? Well, here's the thing. If we go back to what I just said, price needs two things, in my opinion, either a POI or it needs liquidity. Well, we know we've got this break of structure right here. And then after that point, where is the liquidity? Well, there's liquidity right here. There's even more liquidity sat up here. And then there is finally even more liquidity sat right here and right here. But you see, after this point of liquidity, it is literally just an imbalance, another imbalance, and then a POI. So now we have a gap, or we've got an imbalance in orders up here. So now that we know that the breaker structure has happened down here, we've got 3 to 4 points of liquidity that price can take out, and price does exactly that. We take out the first one, we then take out the second one and the third one, and then finally we take out the fourth one. So at that point, it was just about looking for an entry model that would work for me. Well, if we have a look at this, we've got our first test, price tries to move down and then fails, buyers step back into the market. We then do one last sweep. As soon as we've done that last sweep of liquidity, which is sat up here, and then you can clearly see sellers come into the market right here, and then we get another selling candle confirming that sellers have taken control. Then we can put our stops above the high, and then we can target that low. And I believe I actually waited for price to come back up on this candle before I actually executed that trade. And we went for a 127, I believe, which actually closed perfectly. So now that we have the entry model, now we just need to wait and go back onto the 5-minute. Well, what do we see on the 5-minute? Price has closed as a rejection candle, another rejection candle, but in order for this entry model for me to be valid, I need to wait for a 5-minute close. So yes, I entered early, but had this next candle closed as a bullish candle, I would have closed out that trade because it's not the edge. But the fact that it closed as a bearish candle confirmed to me that sellers have really taken over price action at this point. And as you can see, price literally just melted, absolutely melted. We have our first point of interest right here, and then it just melted through that pretty much. And then of course we carried on towards that point of interest. Now what was nice about this is if we go back to the 1 minute time frame, you can clearly see as soon as we got out of the trade, price pretty much did a reaction, and then yes, okay, carried on. Now you might be asking me, well, why didn't you go and try and take out the low? Purely because this is, to me, an SMC concept, so I don't really go and take out the lows, even though I could have done in this situation. But the reality is price still has a good chance of reacting, which it did, in fairness, right? It reacted right here, spiked up, and then it carried on to the downside. But price could have very easily just reacted and started pushing back up again. All right, this is a powerful 5 minute point of interest where price can react from. In this particular occasion, it didn't. It just reacted slightly and then carried on and took out the liquidity at the lows. But even once it took out that liquidity, you can see for yourself, it then pumped all the way back up. All right, so executing the trade is one thing, knowing how to manage it is something else. All right, and that's where understanding where you need to take partials is crucial. This was a 1 to 3.7 that I looked at, but I ended up taking out 80% of this trade once price got to the end of this 1 minute and 5 minute point of interest, and then I moved stop to break even at that point, and then I just allowed the rest of the trade to play out and run. And then I ended up taking around about 2.7% gains on this account, which ended up being around about 2.6% gains. I think it's 2.7 or 2.6% gains on this account because I took partials off. It was a 1 to 3.5, but there you go. All right, I'd rather take the partials and move to break even and allow the rest of the trade to play out, just purely for my peace of mind. And then I can just relax and sit back after that point. And there you go, guys. All right, so it's not always just about the SMC concept. There are different entry models that you can look at to go in line with SMC. I mean, it's still the foundation of SMC. It's just a slightly refined and slightly different entry. But again, this is one of the things that I use for FutureFunded to pass my accounts with FX and with futures, by the way. So I do it with both, and it has allowed me to get consistent payouts. So if you want to know more, keep watching the videos. So guys, there you have it. All right, I have two different entry models when it comes to SMC and the additional one. So now you know for yourself exactly how I enter and exit the market. If you want to have future videos like this, then just click the link, make sure to like and subscribe, and I'll be sharing more content with you. But for now, go get your challenge at FutureFunded and start implementing the things that I've done.